Let's get into Tesla.
Price target of 298 joins us right here at Post 9. Not going your way today, Tom. Why do you feel like things are going to turn for this company?
Yeah, I mean, look, this company is in between two waves, is what Elon calls it, right? You had the Model 3 and the Model Y, which is largely saturated. The next big catalyst is going to be the affordable car. Unfortunately, that comes in, H2 25. So he doesn't think about things on a day-to-day or month-to-month period, as you probably know.
It's funny. It's just like Cybertruck's just like people aren't viewing it as anything, right? This man just bypassed over Cybertruck. It was like Model 3, Model Y, and then the Gen 2 vehicle or whatever we're going to call it, right? I mean, Cybertruck's still the most talked about, exciting vehicle to launch in the history of mankind, factually, right? And so, I mean, it's just crazy. People are just bypassing that, and I'm like, they're going to sell every Cybertruck they can possibly make for years to go into the future. And I think the margins on those Cybertrucks long term are going to be absolutely amazing. So the margins for this next couple quarters for Cybertruck are not going to be good because they're in a ramp period, and margins are always bad when you're ramping. But once this baby's ramped in the back half of the year, and especially in 2025, oh baby, I think those margins are going to be top tier, like best Tesla's ever had in terms of a vehicle.
Oh, he's looking at things from a years, if not decades perspective. So we're just in between this period of two lulls. Eventually, we'll get this catalyst with this vehicle that'll come out. And there's some long-term tectonic things that people just aren't talking about, which folks like me will start writing reports about and get folks interested eventually.
So, such as?
Energy storage. Nobody's talking about this. This is trillions of dollars of opportunity. Problem is, it's like decades away potentially. These guys have 15% market share in this business, and the profitability is higher than the profitability of cars. And then, of course, autonomy, right? There's just a lot of negativity in autonomy today. Yeah. You guys ever used FSD? I think it's a pretty amazing product. I think it's the most amazing product I've used since the iPhone. We're finally going to get this version 12 this year, which could get the attach rate up. The problem is not enough people have tested this thing. Once you have people test it and the pricing needs to come down, that can change things dramatically. People look at it as a software stock, not just
Hey, like I said, in regards to this, if Tesla wants to change the game, if Elon Musk wants to change the game for Tesla, if he wants to change the game tomorrow, one change, $99 a month for FSD. $99 a month for FSD, and I'm telling you, the amount of people that will start using FSD and will sign up for that subscription will go through the moon. Right now it's at $199 price point. That's a price point that a lot of people have trouble justifying. I'm telling you, bring it under $100 a month. That's the magic number. And people can begin to wrap their heads around that. And I'm telling you, downloads would go to the moon. And it's all straight profit. So they charge $99 a month. It's all straight profit. And so that is what I look at, and I'm just like, dang, man. I think it's going to happen one day. I think one day you're going to see Elon move that price to $99 a month, and I think you're going to see downloads go pretty insane when that ends up happening.
Right. You can sit here and talk about what's on the come, but 25 is a long way away to wait for this new, cheaper model. And so I do wonder what happens in the intervening years at this point to at least keep the stock where it is, if not battle those who say EV sales growth is slowing down. Used car prices for Teslas, for example, are a key indicator that this is not going the way they want it to.
Yeah, you're right. Things could get worse before they get better. There's no doubt about it. My job is to say where this stock will be a year from now, not next week. So, yeah, you're right. And the other issue is, while I think they'll hit the volume target that the sell side has, I don't think it's that aggressive, actually, for 24. I think that'll come from price cutting, which impacts profitability, and that's what everybody worries about. So, you're right. Near term, definitely challenging. Elon says it all the time, right? But again, you got to have a broader view of it. And I don't know about you, I can never time this thing, right? So, it pops when it pops, right? Somebody like me writes a big report and everybody gets excited, and that's the narrative that changes things. Near term, though, I just don't know what the near-term catalyst is from a data point perspective that re-rates the stock.
What percentage of your valuation?
I do. I'll tell you in just a moment. I do.
Model is the core auto business.
10%.
10%?
Yes.
And the rest is energy?
Autonomy and energy.
AI?
Mostly autonomy.
Mostly autonomy.
Yeah.
And what about AI robotics?
I don't include robotics in there at all.
because
right.
because of the risk he might do it elsewhere or something
We
else?
just don't have any evidence of a product that's out there in the market making money. Energy storage is already making a bunch of money for them. And autonomy, they do have an FSD product, which is really compelling, and they're charging $200 a month for this product.
How about China risk? If in fact things really, I mean, TikTok's just one example of tariffs. What may happen a year or two from now?
Yeah, no doubt. It's definitely a risk right now. We saw the Q1 numbers. I think those have to come down on deliveries. A lot of that is China New Year. But look, structurally, it's 40% of their volumes. But at the end of the day, their product that they sell, they do have better profitability than any other car company, maybe besides BYD, right? They should do well long term. And again, auto business, 10% of my valuation, right? It's really an autonomy business and an energy storage business.
All right, so these folks were acting like they don't know a catalyst that can help out the stock in the short term. I know the catalyst. There's one thing that could happen that will change the trajectory of Tesla stock completely. If on the next quarterly conference call, Elon and the management team say that margins are going to start going back up in the back half of the year, done. It's game over. The stock's going flying again. We're back way over 200, and we're just going to roll from there for a long time to go in the future. That's all they have to say. That one sentence would matter more than the numbers, the revenue, the net income, what the next quarter's number is going to be, what the deliveries, what the production. That one thing so far massively would overweigh every other thing. The fact that margins would start going back up in the back half of the year would change everything overnight for this stock. And next thing you know, people would be trampling over themselves to buy this stock again. And so that's the one sentence, and that's the catalyst. That's all that needs to happen. Until people are confident that margins are in a bottoming period and they're going to start going back up, until people are confident of that, they can't buy this stock. And so if Elon came out and said margins back up in the back half of the year, we're going to start increasing margins, and that's going to roll into 2025, whoo, night. Next one up here, Tesla downgraded by Wells Fargo.
With no growth. Easy question. How do you value a growth company with no growth?
I mean, we usually use a DCF. You have to look at the long term, right? So, and then you look at the earnings in the out years as well. So we look at a traditional DCF valuation, looking at the long-term growth prospects, and then we also try to normalize it, what you're pricing in. And even on our price target, I still think you're pricing in 10 million vehicles in 10 years. Long way out, but it's still quite a big number from where we are today.
You've got no growth this year, negative volume growth next year, growth the year after?
I have about 10%, a little over 10% growth in the year after. That is supposed to be when Model 2 hits. And yeah.
Next year. Got no growth this year, negative volume growth next year, growth the year after?
Negative volume growth next year? What? You would be flipping my flapjacks. Does he know Cybertruck's going to be fully ramped next year? That's crazy. And interest rates probably, I think a high probability, are going to be lower next year than what they are this year. That's wild. That's a wild
I have about
assumption.
10%, a little over 10% growth in the year after. That is supposed to be when Model...
That is completely fair if you think Tesla's not going to grow the business this year. I think that's fair. But to say this company's not going to grow in 25, I think is crazy talk.
And to be honest, there's
outside of a
risk to
massive
that,
recession.
We'll see how, we'll see what the potential Model 2 is. They're using what's called unboxed production, which has actually never been done before. So it's high execution risk to bring that to market.
Is this a Tesla problem, or is this an electric vehicle market problem that Tesla's catching up to?
I mean, what I'm talking about is really more of a Tesla problem, to be honest. I mean, I'm pretty cautious on the auto industry in general right now. I have sells on all the Detroit 3 that I cover. But I think you're talking about a product that's a bit old. We're seeing...
Okay, that's important. He's negative on all the automakers. He said he's got to sell on all the Detroit 3. Okay.
Are just not interested in. And what we found in our report, and one of our real top concerns why we drove the downgrade, is that the impact of the price cuts is having a smaller impact on volume. If you go first half to second half, volume went up just 3%, cut price 5%. And the pricing cuts are painful. It costs almost $7,000 in gross profit per unit lost since they started these cuts. And then, as you mentioned in the intro, you have risk to the brand. You have risk to residual values too, and that's going to cause those disgruntled customers when you come back and your vehicle's worth less. So there's been a lot of pain to do these price cuts, a lot of profit losses. and we're not actually seeing the volume. And that's why I feel like they're going to have to make a trade-off at some point and just sort of capitulate that they can't really grow deliveries with price cuts.
So, but here's the deal with those price cuts. You know, yes, painful. Absolutely to go through it, painful. Margins go down. You know, you could have upset customers, all those sorts of things. It is certainly a painful process when you're going through it, right? And Tesla's experienced that last year, this year, right? But the one massive factor no one's talking about nearly enough, in my opinion, in regards to these price cuts, is now something very important has happened. Now the consumer is starting to view Tesla, and this is just really starting because it takes like a period for everybody to kind of get educated on and catch up. Now the consumer is finally realizing, oh my gosh, like Tesla's a value. And you could never say that in throughout Tesla's history. It was always, oh, Teslas are expensive. Oh, Teslas are expensive. Oh man, you must be doing well for yourself. You drive a Tesla, right? There was always the talk in regards to Tesla. And for the first time in its history, as a company, people are looking at Tesla and saying, wow, that's a great deal. That's a great value. I can get a Tesla for blah, blah, blah amount of money. Oh my gosh, like that's, wow, I get all that. I get a vehicle that nice. Wow, I get all that technology for that price. Wow, and I compare it to this. Oh man, this wins. And so that is something that's going to play out for this company for the next, I think, the next 5 to 10 years. That is way bigger than just like the short term. The short term, it just sucks. But the long-term benefit here is going to be exponential. And so I just, I don't think that more people should be talking about that. Next one up here. Let's listen to this Wells Fargo man go more in depth here.
Downgrade to underweight from equal weight over at Wells Fargo, citing numerous headwinds ahead. The firm expects volume to disappoint and also lowered its price target from $200 a share to $125. Here's the analyst who made that call, Colin Langan. Phil also on the line with us. Colin, welcome. Good to see you. I'm curious, what is the market share of Tesla in the U.S. Among total automobile sales, auto and truck sales, and among EV sales? What kind of share do they have?
I mean, they're very small into the overall market. I mean, they're very large in EVs. I mean, what we're seeing, and that was the point of our report today, is that we're actually looking at the impact of the price cuts are surprisingly low at this point. We saw volume actually, if you look at first half to second half globally, up just 3%, and pricing was down 5%. And that's really what driving our lower deliveries. We're expecting deliveries to be about flat this year because we're really expecting more limited ability to cut price. Otherwise, you're going to hit a point where you're not very profitable anymore. So you cut price, you hope volume will increase, but you're not seeing the kind of volume increase that is commensurate with the price cuts. What about this Model 2 that they expect to bring out in 2025? Is it going to be a game changer, or is it too little too late here? Well, I mean, I think that was the other part of our report today. We were looking at the potential for Model 2. I mean, and one of the things that really is concerning to me is that it's different from other launches. This is a mass market priced SUV. That's going to be very tough to do. I mean, the actual, if you go to an internal combustion engine, compact vehicle today, they're not very profitable. You add on an e-powertrain, you're probably starting off at a losing point. And then if you're then really betting on this unboxed production, which is the new manufacturing methodology they plan on launching with the Model 2. That's a bit of a wild card. It's just never been done before, and we still estimate you need most of those benefits to come through to get this to profit levels that we're seeing on their current vehicles. What does unboxed production mean? I noted it in your note, and I wasn't sure what...
Okay, so, this is where history lessons are important, okay? When the Model 3 first got shown off, what was the price point that was talked about for Model 3? It was $35,000. Oh, it's a $35,000 Model 3. Everybody got really excited, right? It was super talked about. You couldn't get a $35,000 Model 3 for a long, long time. And actually, you've hardly ever been able to get a $35,000 Model 3, right? It certainly did not happen for years and years and years. So Elon might show off a $25,000 product, but there's a high probability you're not going to get it for $25,000. The first generations of it might be $35,000, might be $29,000, $32,000, something like that, okay? So I just think that's another big factor to kind of take into account. The second big factor I think, people are missing in regards to that, right, is this next vehicle, it's really an FSD play. It's not necessarily about let's make a bunch of money on the car. It's about let's get this car, this vehicle, we can call it that, into as many people's hands as possible because we're going to be able to sell FSD on it, right? Robo-taxi opportunity. That's what this next one's about. And that one's really, that's more of a 2026 and beyond story. I think the next few years, it's really about 3Y and Cybertruck with maybe a semi on top of that, right? So anyways, I think that it's important to understand kind of the goals are different than maybe past vehicles with Tesla.
Yeah, I mean, it is a new term. No one has actually done it before. So the idea is it's a change in the entire assembly line. And from experts that we talk to, they're trying to eliminate all the bottlenecks, automate as much as possible. The vehicle won't run through one line. It'll actually be assembled in different subcomponents and then come together at the end. This enables, one of the potential benefits maybe is you could put more throughput through the paint shop, which is the bottleneck today. But also you probably could automate more along the line and eliminate some of the manual inputs. So it's supposed to improve your efficiency. What we found in our report is that, there's probably between labor and fixed costs that are absorbed per the vehicle, it's probably $9,000 to $10,000 per car. So if you could double that, there's like $4,000 to $5,000 in benefit. You really kind of need most of that benefit to get Model 2 to probably profitability given the powertrain costs you'll be adding.
Phil?
Hey, Colin, it's Phil LeBeau here. I'm curious, when you look at all of the headwinds, not just for Tesla, but for electric vehicles overall, what do you believe is the biggest one right now? Is it the fact that we're not seeing enough models at the lower price points that would drive sales? Is it the concerns about range adoption or range anxiety, charger anxiety that is out there? What do you think is the number one headwind?
I think number one has been pricing. I think it's, and I think it's just the price. I also think we need sort of SUVs too, so I'm not sure a small vehicle actually necessarily addresses that for what Americans want. So I think one, people want more affordable EVs, and then two, it's always been charging. But the one thing we talk about in the industry, and one reason we're cautious on all of the Detroit 3 as well, so we're pretty cautious on the automakers right now, is the fact that there's still regulations coming. So the industry is going to be a really tough spot here because the automakers are going to need to sell more EVs to hit those standards, which means everyone's going to be forcing these vehicles into the market, which is never very good for profitability when that happens.
Yeah, but no one's got price points like Tesla's got price points outside of China. No, this is where things come into play with Tesla, right? Tesla's down over 35 percentage points year to date. And there's a whole multitude of reasons on why Tesla stock has dropped 35% to start this year. But one of many reasons is around demand, right? And specifically in China. So China, the market's highly competitive, but there's a fear that, okay, let's say TikTok gets banned in the United States. Who's to say China's not going to all of a sudden say Tesla has to sell their business to somebody else, or Tesla's not allowed to operate there, or something like that, right? And that might be a very far-fetched reality that some people are thinking, right? But it is something people are considering. And when you look at Tesla, they have production for nearly 1 million vehicles a year out of the Shanghai facilities. Those facilities, they've built those over the past 5 years, and those facilities are epic. And they're the most important facilities, to be quite frank, for the company overall. And so if there's a fear about, something happening here, then all of a sudden people get very concerned about Tesla stock because they're like, wait, if China does something here, a huge, huge part of Tesla's business goes away overnight, right? Now, what are the odds or probabilities that I see China going after Tesla? I think the odds on that, I live in Vegas, we put odds on everything. I think the odds on that would be about 15%. It is a possibility, and it's something that as a Tesla shareholder you have to be aware of, right? But the one thing I'll say is Elon Musk has a great relationship with a lot of very important Chinese officials, and they have a tremendous amount of respect for Elon Musk in China. I would say Elon Musk is a top 5 most respected person that lives in the United States in China. I think he's top 5. I cannot think of 5 other people that the high-ranking officials in China respect more than Elon Musk, okay? He has a tremendous amount of respect. So I would say them coming after Tesla in any sort of big way would be, that would be like, final stages type stuff. So I wouldn't say that's very high probability. And we know Elon Musk has a lot of respect for China, and he has a lot of respect for the competitors in China, right? In the latest conference call, Tesla CEO Elon Musk says Chinese EV firms will demolish rivals without trade barriers. Chinese car companies were the most competitive, that's Elon Musk quote, and will have significant success outside of China depending upon what kind of tariffs and trade barriers are established, Musk said on the conference call. If there are no trade barriers established, there will be plenty, they'll pretty much they'll pretty much demolish most other car companies in the world. They're extremely good, he says. And no doubt about that. I have no doubts in regards to that. All these other auto manufacturers would be absolutely decimated if the Chinese companies, because, people want to compare these Chinese companies to other foreign companies like Volkswagen or Toyota. No. Listen to Elon Musk. This man's actually in the market. He actually competes with these guys. He's saying, no, Toyota, Volkswagen, Ford, GM, all these other guys, cake, okay? The Chinese car companies, that's a whole different ballgame there, right? And you can see what happens when you compete with the Chinese companies. Iron sharpens iron, right? That's a great saying. Iron sharpens iron. And you look at Tesla, they got the number one selling vehicle in the world in 2023, right? They go head to head with these Chinese companies on a daily basis. So, them competing in other markets, that's all cake for them. And they already compete with the granddaddies, right? Model Y, look at this. I mean, I can see why it's selling so insane, right? It's the best value in the world by far. I mean, just ridiculous that you get that sort of vehicle for that price. Crazy. So in regards to Tesla stock specific, right? Stock down 35% this year. Listen, here's the facts. Number one selling vehicle in the world, right? They got the most hyped and talked about vehicle in history that is ramping right now in Cybertruck, right? That we don't even know. We don't have any clue or conception on where the top is for Cybertruck. We don't know if that's going to top out at 200,000 units a year, 400,000, 600,000, 800,000, a million. We have no clue. We just know it's going to ramp for years to go in the future. That's all we know, right? That's happening right now. Right now. We know Tesla's got countless products in the pipeline. We know margins are likely bottoming right now or close to bottoming, right? But none of that matters right now. We're in a fear cycle around this. It's getting everybody to sell all their shares, right? And remember, I always say this to guys. It's very important everybody remembers what I'm about to say right now, okay? Listen, every share that's sold, somebody's on the other side buying those shares. They don't just evaporate or something. For every time there's a seller, there's a buyer. I have shares personally of Metastock that people sold to me for $88.94. I have ELF shares I hold today, that stock's $200, that people sold to me for $7 and change. $7 and change, and that stock's $200 today, okay? So there's always somebody on the other side that's just gobbling up the shares. It's like, gimme, right? So let's say some fund manager went ahead and liquidated his whole position of Tesla yesterday or today or whatever, right? Somebody's on that other side scooping up all those Tesla shares at $160 something a share, right? And it's like, I'm glad to get these shares. Thank you so much for these. I appreciate your donation, right? So that's just a little food for thought in regards to that whole situation. So everybody can get caught up in these short-term things, but there's a lot of other short-term things that are actually going on that are very good, and the long-term things that are adding up significantly here, right? So just a little food for thought in regards to that.